Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. BSP Governor Eli Remolona Jr. stands firm as the central bank shrugs off pressure to defend the peso, with reserves surging past forecasts. A gold rally is pushing Philippine reserves beyond targets as geopolitical tensions continue to shake the global economy. The World Economic Forum is sounding the alarm as fractured trade, climate, and technology ties make doing business tougher worldwide. The race to succeed Apple's CEO is tightening, with a low-profile executive emerging as Tim Cook prepares multiple successors. The German president is blasting Trump-era U.S. policy and warning of a global slide into what he calls a den of robbers. The pressure is on the central bank to step in, but the message is to hold back. The Bangko Sentral ng Pilipinas, or BSP, is facing intense calls to defend the peso as it weakens. BSP Governor Eli Remolona Jr. says that the central bank is not acting on those calls. He says current economic conditions do not warrant forceful intervention. Remolona says that the BSP is not alarmed by a move toward the 60 to the dollar level. He says that the central bank will step in only to smooth excessive volatility that could fuel inflation. This comes as the peso slides to a record 59.35 per dollar. The move is driven by a stronger U.S. dollar and uncertainty over U.S. monetary policy. For businesses and markets, this signals the central bank is prioritizing price stability over short-term currency defense, leaving firms to manage forex risks on their own. So if the central bank isn't stepping in to defend the peso, the obvious question is why? The answer: the country's financial buffer is actually getting stronger, not weaker. The Philippines closes 2025 with foreign reserves up 4.3% to $110.9 billion, even as global volatility continues. The Bangko Sentral ng Pilipinas Governor Eli Remolona Jr. says that the increase is driven by record gold holdings. He says gold now makes up nearly 17% of total reserves, up 69% from a year ago. Remolona says that the central bank continues to keep its reserves well diversified. In practical terms, the reserves are large. They can cover a little over 7 months of imports. They're also about 4 times the country's short-term foreign debt. That means that the Philippines has a strong cushion against global shocks and against sharp moves in the peso. Now, revenue gains late in the year, even as the full-year target slips out of reach. The Bureau of Internal Revenue posts a strong December, pushing full-year collections to 3.1 trillion pesos. That's still short of the agency's 3.2 trillion peso target for 2025. BIR Commissioner Charlie Mendoza says December revenue grows 7.5% year-on-year. He says collections came in stronger than expected. The increase comes as audit activity continues to be recorded. Looking ahead, the BIR is setting a much higher bar. The agency is targeting 3.6 trillion pesos for collections this 2026. It's pinning its strategy on digitalization, tax evasion cases, and a continuing collection drive. This push continues even as the agency deals with disruptions linked to flood control investigations. The fast lane is no longer just about speed, it's about scale. The Board of Investments approved 6.1 trillion pesos worth of projects under the government's Green Lane program. That brings total strategic investments to 232 projects, with nearly 399,000 jobs expected nationwide. In 2025 alone, 81 projects worth 1.96 trillion pesos received Green Lane certification. These projects are expected to create more than 163,000 jobs. Most of the investments are still in the pre-development stage. Renewable energy dominates the pipeline, making up 85% of endorsed projects. Foreign investors from Denmark, the Netherlands, and other countries are also committing billions of pesos to the program. The rice import market reopens, but the safety net remains thin. After 4 months off the global market, the Philippines restarts rice imports. The tariff rate, however, remains low, offering limited protection for local farmers. Imported rice continues to face a 15% tariff. A proposed increase to 20% has yet to be formalized or implemented. Rice shipments are expected by the end of February. The Department of Agriculture is allowing up to 500,000 metric tons during this import window. Thailand, a traditional supplier, is already seeing the move as an opportunity. Filipino farmers, meanwhile, warn that limited tariff protection could push farm gate prices lower. On another front, budget vetoes are putting government incentives for car makers in question, sending ripple effects through the Philippine automotive industry. For consumers, that could mean fewer new models, slower investment in local assembly, and less price competition over time. The Chamber of Automotive Manufacturers of the Philippines, or CAMPI, says companies under the Comprehensive Automotive Resurgence Strategy, or CARS, deserve the incentives they were promised. The group says that these firms have already delivered significant economic gains. The issue follows President Ferdinand Marcos Jr.'s veto of unprogrammed appropriations. This includes 4.32 billion pesos in fiscal support for the CARS program. An additional 250 million peso allocation for the RACE program is also cut. CAMPI says both the CARS and RACE programs are key to industrial development. They support automotive manufacturing, strengthen local parts production, and help build long-term industry competitiveness. Trade Undersecretary and Board of Investments Managing Head Seferino Rodolfo says that the government is coordinating with relevant agencies. The goal is to ensure payments to CARS participants proceed despite the vetoes. The country's air and sea borders are busier, but the recovery is still modest by regional standards. International travel into the Philippines continues to pick up, even as arrivals remain well below neighboring tourism markets. The Bureau of Immigration records 15.6 million passenger arrivals in 2025, a recovery but far from a full rebound. That total is 6% higher than the 14.7 million arrivals recorded last year, based on immigration data. South Koreans led international arrivals, followed by Americans, Japanese, Chinese, and Australians. The uptick points to improving momentum, but the Philippines continues to trail regional peers in overall tourism volumes. Ongoing airport modernization efforts aim to close that gap by making travel faster, smoother, and more efficient. Faith and governance converge at one of the country's largest religious gatherings. President Marcos calls on Filipinos to let their devotion to Jesus Nazareno shape daily life as the nation marks the annual feast. For business and investors, the message matters. Governance rooted in fairness, responsiveness, and social trust shapes confidence and economic participation. The president reflects on sacrifice, perseverance, and solidarity. He says that the procession mirrors the struggles and hopes of Filipino families. Marcos says listening to the prayers of devotees highlights the need for more responsive governance. He calls for fairer opportunities and urges a more humane and faith-guided Bagong Pilipinas. With millions expected to converge in Manila for the annual Feast of the Black Nazarene, Vice President Sara Duterte delivers a message centered on faith, sacrifice, and devotion among Filipino worshipers. That event also puts a spotlight on crowd management, transport, and public safety, a major test for Manila's crowd management, transport, and public safety systems.
Assalamualaikum warahmatullahi wabarakatuh. Madayaw mayong adlaw kaninyong tanan. Magandang araw sa inyong lahat. Sa pagdiriwang natin ng kapistahan ng Black Nazarene, muling binibigyang diin ang ating matibay na pananampalataya bilang mga Pilipino. Ang debosyon sa Black Nazarene ay nagpapaalala sa atin ng walang kapantay na pag-ibig, sakripisyo at pagpapakumbaba ni Jesus para sa sangkatauhan. Sa bawat taon, ang bawat hakbang na tinatahak ng mga deboto sa kabila ng hirap at pagsubok ay nagpapatibay sa ating pananampalataya. Ang pista ng Itim na Nazareno ay hindi lamang isang selebrasyon ng nakagisnan na tradisyon. Isa itong panawagan upang pagnilayan ang ating mga pagkukulang, humingi ng tawad at magpasalamat sa lahat ng biyayang natanggap. Naway magsilbing inspirasyon ang Itim na Nazareno upang patuloy nating isabuhay ang turo ng pag-ibig at pagtitiwala sa plano ng Diyos. Mahalin natin ang Pilipinas para sa Diyos, sa bayan, at sa bawat pamilyang Pilipino. Shukran.
Authorities expect around 8 million devotees to join the 5.8-kilometer Translacion procession through Manila, ending at Quiapo Church. The Translacion is the country's most anticipated religious ritual and a powerful display of faith, discipline, and collective endurance. Now, just over a week into 2026, Philippine businesses are taking stock of a mixed environment. Lower inflation, policy adjustments, and a full-year national budget now in place. The question for markets and companies is whether these changes are translating into real confidence. To assess where business stands and what could move the needle in 2026, we're joined by Brian Ang, the Vice President for Trade of the Philippine Chamber of Commerce and Industry, or PCCI. Hi, Brian. Thank you for being with us here with us this morning.
Hi, Maiki. Happy New Year to you and to your viewers.
Yeah, Happy New Year. Brian, let's start with the state of play. Just over a week into 2026, how are PCCI's members assessing the current business environment? We've got this unresolved corruption scandal, delays or reductions in government spending. But on the plus side, we've got this record budget, the largest national budget ever. What is the beat on the street today among your members, Brian?
I would describe it as cautious optimism. The caution is coming from unresolved scandal in corruption. And also, you have a looming impeachment case to be filed by Congress against the Vice President. Whenever you have impeachment cases, a lot of government bureaucracy is spent and government energy is spent on hearing of these cases and mudslinging back and forth. The optimism comes from this record budget that the government has approved. With this record budget, you will have record spending, and we hope the slowdown in spending we experienced towards the end of last year will be rectified by bigger spending and bigger programs of the national budget. Moreover, you will see that they have decentralized the implementation of these programs. The farm-to-market roads are now given to the Department of Agriculture, and classroom building rehabilitation has been returned to the DepEd. So these are good signs we are looking forward to.
Okay, so let's talk about that. That 6.79 trillion peso national budget for fiscal year 2026 that was signed earlier this week. The palace is calling it a people-oriented budget. What's the PCCI's take on this?
I would rather want to see a budget that is oriented on the Build Better More program. We urgently need public infrastructure spending. We urgently need resumption of government programs. The people's budget is okay because it allots a lot of funds to the ayuda. But as you know, ayuda is just a band-aid solution to a bigger long-term problem.
Yeah.
I noticed also a lot of the unprogrammed funds for local counterpart funding of ODA was vetoed by Malacanang. And this was alarmed by NEDA yesterday, saying that this will greatly affect the mobilization of ODA infrastructure projects. It can also send the wrong signal to foreign lending agencies that we are not prioritizing our big-ticket infrastructure because we are not funding the local counterpart of their loans.
Yeah, that's an interesting point that you mentioned, that the budget has a focus, is geared towards ayuda and not to big infrastructure projects, which is what we need. How is this affecting, in your view, how is this affecting ODAs? I mean, we get loans from JICA, from the ADB, but the government plays a big part in financing this. And without the government support, we won't have any of it. What are your thoughts on how this is panning out, Brian?
If you remember late last year, the S&P gave the Philippines an above investment grade rating of BBB+, even with a positive outlook. We should have maximized this rating by engaging more multilateral lending agencies in funding our big-ticket infrastructure. As you know, whenever you borrow from a foreign lending agency, it requires local counterpart funding. And if you do not pay the local counterpart funding upfront, it will delay the implementation of the project altogether. And so I hope the government will reconsider and put more unprogrammed funds towards foreign-assisted projects for this year.
Yeah. When you give ayuda, the benefits to the current administration are immediate. But when you invest in big-ticket infrastructure projects, the administration doesn't reap the benefits. In other words, the succeeding administrations are the ones that benefit from this. Do you think that in any way had a part in the decisions over the 2026 budget?
I mean, you just had the survey results on the trust rating of the president, and it dipped down a bit. So it makes sense for him to want to give immediate relief to the poor people through ayuda. But at the same time, you cannot just discount long-term infrastructure benefits to the economy and also for job generation for the poor people. Yes, it is true, infrastructure projects do not happen overnight. And if a loan is signed today, more than likely the completion of the project will be enjoyed by the next administration, not this administration.
Yeah.
So logically, you may want to fund ayuda if you are the administration today.
Yeah. Okay, Brian, another thing I wanted to bring up, globally, we're seeing disruptions in the oil market given the issues with U.S. and Venezuela. Against this backdrop, there are going to be shifts in oil supply. That said, are you pushing for VAT relief?
Yes. For the first time, you will hear consumer groups, labor groups, employers groups all pushing for VAT relief, both in fuel and in energy and in electricity. Even politicians and legislators have voiced this out. Because you have uncertainty right now in the price of fuel with this invasion of Venezuela. And I'm sure this will not be the last invasion that America will make on oil-rich nations. So businesses heavily rely on inputs such as energy and electricity. And if we want our local industries to remain competitive, they should be given this subsidy. In the ASEAN region, we may be the only country without subsidy for electricity. That's why we are less competitive.
Yeah. Another thing I wanted to talk to you about, tax administration and revenue. About a month ago, the BIR suspended LOAs, letters of authority to address alleged abuse. There's talk that might end in January. Anyway, can you describe the impact the suspension of the LOAs have had so far on the ground?
First of all, the suspension of LOAs was heavily lauded and applauded by all industry and business groups because LOA has been a symbol of harassment. So when Secretary Go assumed office, he immediately suspended this. However, the sad part is we are hearing that the suspension will be lifted either end of January or early February. We hope that the safeguards pronounced by the Department of Finance and the new BIR commissioner will be followed. A data-driven, algorithm-based LOA issuance system rather than human intervention on issuance of LOA will be done. Second, they have announced that there will only be one LOA issued per company in a year. Before, in a fiscal year, you could receive multiple LOAs. So this would open multiple avenues of harassment. Lastly, we are pushing that if a company has been issued a LOA for 2 consecutive years and has been issued a tax clearance, you should no longer issue a LOA for the succeeding year.
Mm-hmm. Okay. Another thing I wanted to ask you, Brian, both the BIR and the BOC missed their revenue collection targets in 2025. The BIR by 100 billion pesos, the BOC by 24 billion pesos. What does this say about the state of business activity?
These are 2 big indicators that there is an economic slowdown, Maiki. Because historically, BOC and BIR hit and even exceed their targets. So this is a warning to us that much change has to be made and much new economic and fiscal policy has to be made. And I've seen the BIR and the BOC aggressively implement digitalization efforts to improve efficiency and transparency, and we have to laud them for that.
All right, moving forward, just really quickly, I wanted to talk to you about the tourism gap, jumping to another topic. Despite strong tourism demand across the region, the Philippines still lags behind. From a competitiveness standpoint, what's the urgent fix for 2026, Brian?
For the tourism gap, reports have shown that we have only about 5 million tourists arriving this year. This is a far cry from the 8 million tourists that arrived pre-pandemic. It has been 3 years since the pandemic and we have not even recovered. So this is very sad. However, there are new developments that we can be excited about. First is the issuance of the approval on the e-visa for all China visitors. China visitors drastically declined during this term. from almost 2 million visitors a year to what, 200,000+ only this year. And we know that Chinese tourists spend almost $2,000 per head. They are one of the highest spending tourists in the world. So I hope this can jumpstart the arrival of tourists.
Yeah.
I also read yesterday that there may be some changes in the head of the tourism industry, tourism post, and the names that were being floated are captains of their industry and understand tourism very well. The logistics side of tourism and the ease of traveling for tourists.
Brian, jumping in there, do you think that changes at the cabinet level at this junction would meaningfully move the needle, like particularly on tourism?
Definitely. I think the president is moving from putting political appointees to putting private sector and industry experts into key government positions. And as you can see, like the likes of Secretary Go in DOF and Secretary Tiu Laurel in the DA, they are able to harmonize the concerns of both government and the private sector and come up with immediate win-win solutions. So maybe in tourism, if we bring in someone from the private sector, it will immediately help us.
Yeah, not just for tourism, I guess. So your message is no political employees. These are seen as political moves to kind of give back for help. What the PCCI wants to see are appointees from the private sector with proven track record and that can get, hit the ground running. Is that correct?
Not just for tourism, but for all major implementing agencies. Maybe you reserve the political appointees to diplomatic posts.
Okay, all right. Thank you very much, Brian Ang from the PCCI, for your thoughts this morning.
Thank you, Maiki.
We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Esquire Financing is moving to clarify its position. The lender says it has no business or financial ties to companies linked to congressmen implicated in the ongoing flood control corruption scandals. Esquire says it has no transactions with Newington, Congressman Edwin Gardiola's S-Ang or their proprietors. The company also says it maintains no joint bank accounts with these or any related entities. The statement comes amid reports that the Anti-Money Laundering Council froze joint accounts linked to S-Ang Construction and Esquire Financing at Philippine Business Bank. The accounts are part of a broader probe into alleged irregularities connected to the flood control projects. Esquire emphasizes that it operates under strict compliance and anti-money laundering standards. The company says it remains committed to transparency and to full cooperation with the regulators. Global business conditions are getting tougher just as international cooperation weakens. A new World Economic Forum survey shows growing challenges for companies heading into 2025. In a poll of 799 executives across 81 economies, 43% saying doing business is harder than in 2024. Respondents cite rising barriers to trade, talent, and capital flows as just some of the reasons. The World Economic Forum says recent U.S. tariff announcements in 2025 have added to trade uncertainty. Many executives also see declining cooperation on peace, security, and climate issues. The findings come ahead of the forum's annual meeting in Davos later this month. Malacanang says President Marcos will skip the World Economic Forum for a second straight year due to domestic commitments. The Philippines will be represented by Ambassador Manuel Antonio Tihanki from January 19 to 23 in Switzerland. Now, markets are on the move. Here's how global stocks closed overnight. Wall Street ended mixed Thursday with tech stocks led by Nvidia under pressure. Defense shares, meanwhile, moved higher after President Donald Trump called for a $1.5 trillion U.S. military budget. Defense stocks jumped after Trump said that the 2027 military budget should far exceed the $901 billion package approved by Congress for 2026. Gains were not uniform, however. Some defense shares slipped in the previous session after Trump warned he could block dividends and share buybacks until contractors speed up weapons production. In Europe, London's FTSE 100 finished relatively flat. Losses in oil and retail were offset by gains in defense as financials, as UK markets paused after hitting a record high earlier this week. Now let's check on how Asian markets are doing on our side of the world. Right now, the Nikkei 225 is trading to the upside, up by 1%. Hong Kong's Hang Seng Index higher as well, up by 0.4%, and Shanghai's Composite up by 0.6%. While Singapore's Straits Times Index is flat with a slight downward bias. Checking on our market as of 10:26, the PSE Index is trading to the upside, up by 0.4% to 63.48. Taking a look at the All Shares Index, that's in the green as well, up by 0.3% to 36.19. Taking a look at the sub-indices, we're seeing a mixed picture. The financials, holding firms, services, and mining and oil counters are trading to the upside, whereas the industrial and property counters are limiting the market's advance. Now, total volume traded is at 647 million shares, valued at just a little over 1 billion pesos right now. So far, market breadth almost neck and neck. We've got 76 advancers, 71 decliners, and 57 stocks unchanged. On the currency front, the peso opened at 59.20 against the dollar, down from its previous close of 59.17. Apple is stepping up its succession planning, with senior executive John Ternus emerging as a potential heir to Tim Cook. The New York Times reports that Ternus, Apple's head of hardware engineering, is viewed by some insiders as a leading contender. The report says Cook, now 65, has told senior leaders that he wants to scale back his workload, raising the possibility of a future transition. The company says that it has accelerated succession discussions and is also preparing other internal candidates. Cook is expected to move into a board role if he steps down as chief executive. Apple declined to comment, saying that the board will make the final decision on the company's next leader. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.